Wait, does this not show? One second. I don't know how this. Is this live? Hmm. I don't know. Oh no, it's definitely live. Okay. Well, it is 2 o'clock, um, and I said I would do these videos, so I'm going to do these videos. So the purpose of these videos, I really figured or tried to figure out how I can add to the videos and everything else people are adding and doing to get through quarantine. I myself have been in quarantine. Yesterday was my first full day. I came up with this idea over the weekend, um, and so I figured why not. So um, I could tutor, but I don't think I have patience to do that. I can do all sorts of things, but I figured this is my skill set. I have education and experience in investments, so and I get questions about it all the time. So I plan on doing one of these videos every day this week and next. Um, I'll shoot for 1 p.m. every day. Today it was at 2, just because I had prior commitments. So and I'm starting with the very basics. So this week's are the whats. So I'll go over what are stocks, what are bonds, what are mutual funds, what are indexes or indices if you're fancy. And then I'll also do different types of retirement accounts. And then next week, I want to do the hows of investing, which is how to open an account, how to read a stock quote, how to evaluate stock, and how to buy stock and what your different options are to buy and sell stock. And really, my goal is twofold. So one is show that investing isn't just for rich people. It's fairly accessible, particularly these days, to the everyday person like you or I. And then it's not as complicated as you think. So I guess we'll go ahead and get started. I guess if you have questions, which I'm not 1,000% sure. Oh nope, see, I see. All right, hey Jay. Um, if you have questions, ask me. I'll answer them if I don't know, or if it will be better addressed in a different video. I'll say that. So going ahead and get started. So we'll just start. What is an investment? Let's talk about that. There are a lot of people who spend a lot of money on a lot of different things and call them investments, and they are not. So an investment is pretty basic. All it is something you put money into with the expectation that you will have a return or a profit from it later. Um, so, I mean, it's pretty intuitive, pretty self-explanatory. But when we go to school, we take on a lot of money and a lot of debt, with the assumption and hope that we will make a lot of money on the back end with our degree, whether it's a law degree or a medical degree or just our business degree or something. That is an investment. What is not an investment, and I always like to point this out, is a car. Your car is not an investment. Let that sink in for a little bit. Not an investment. It is a depreciating asset. So it is an asset. It's just not an investment. So if somebody's talking about buying that brand new BMW and they're like, oh, it's a great investment, it's not, because it's not actually an investment. You'll be better served putting your money elsewhere if you want to make money from it. So uh, Warren Buffett said, if you don't find a way to make money while you sleep, you will work until you die. So, and that's really, again, what I want to impart in all these videos is just that it's important to invest, whether it's in stocks or real estate or any other thing. So, yeah. So, anyway, let's jump right in. What is a stock? Stock represents a share of a company. When you own stock in a company, you are a shareholder. So that means you have some level of rights to the profits of the company. Every company, whether public or private, has shares, has stock. Now, private companies obviously are private, so those stocks are sold through what is called a private placement. Won't spend a lot of time on it, but for example, Coke Industries. I know a lot of people who are on my Facebook are from Wichita or are familiar with Coke Industries. It's one of the largely held private companies in the world. So if I walked up to Charles Cook and said, "Hey Charles, what's up? I got $5," that I'd slide across the table and say, "I want to invest in your company." And he was like, "Oh, great, Marcus. Here's a buttload of stock." That would essentially be a private placement. Of course, a lot of rules, regulations, and stuff around that, and it's actually a bit more complicated than that. But nonetheless, private companies do also have stock. You just don't have access to it, the everyday person like you or I. The public companies, which is where we'll spend most of our time on, those are where what everybody invests in. 50% of the country holds stock, usually through 401ks and stuff, but everyone holds it through the public market. So there are two types of stock. There are common stock and preferred stock. Common stock is your everyday run-of-the-mill. Peanut. I haven't had somebody call me that in I don't know how long. So common stock is just your everyday run-of-the-mill stock. When you go, you buy it, you own a part of the company, and that's about it. You get, as the stock appreciates in value, you get that return once you sell. And then preferred stock, that comes with a bit more benefits. It has a elevated rights. So if the company goes out of business, for example, and they have to liquidate the company, preferred stockholders they'll get money back before the common stockholders. But we'll focus primarily on common stock through this whole video series, just because, again, when we go to the stock market, most of us will only buy stocks. Oh, hey, all those folks, look at that. All right. Sorry. One thing I realized that I didn't write a full, a script for this. So I'm just sort of going off of what I know. Sorry. So two things, how you make money from stocks. Two things, two ways. If you buy a stock and it's $10 a share, then it goes up to $15 a share. Then you make money that way based on the appreciation. Now, to actually make the money, you need to sell the stock. But on paper, you've made $5 per share, or a 50% return in that particular example, which is great. That would be a fantastic return, and sometimes does in fact happen. And then the second way that you make money is through dividends. And dividends are payments to the shareholders that come from the profits the company makes. So you already own stock at $10 a share, and it goes up or down throughout the day, and the company has extra profits at the end of the year, and they determine that they're going to pay out so much of the profits to the owners and or shareholders, and it's usually a couple cents per share, but it just depends on the company, how much money they make, how often they do dividends, and so you can make money that way as well. So if you ever hear somebody say, "Oh, well, this stock pays me dividends," it means they are literally paying extra money on top of whatever amount of money you own in the stock itself. And I think that's sort of it, a real basic, low-level understanding of what stocks are. Again, as I do more of these videos, I will have, I'll have scripts written, so I'll be a bit more organized. But I just wanted to figure out how this Facebook Live video works. Once I figure out how to share my screen, I will also, particularly next week, I'll walk you through my own TD Ameritrade account. It doesn't have a lot of money in there, so don't get excited. But again, I just want to show how you actually do it and show that you don't need a lot of money to do it. I think the account that I'm going to show you only has $400 in it. And so over time, you can build up to $400 or start with 50. So yeah, good luck. Hopefully you'll watch the rest of these videos. And like I said, they'll be a bit more organized. I'll have an actual script written for them, so I can make sure I hit everything. And I might even redo this video, just to go over more detail on certain things. So anyway, see y'all on the other side. All right, I got to figure out how to hit this video. Oh, there it is.